I just bought 2 properties, a set of retail offices, kind of, and a storage/apartment/warehouse. So we're going to talk about these 2 properties. They're awesome. I think it's pretty cool. I think we'll learn a lot from them as well. On the Furlo Capital Real Estate Podcast, where we dive into the intricacies of passive real estate investing. And our mission is to equip investors to invest wisely in both people and property so that together we can build wealth while improving housing. I'm James, and this is my wife, Jessie.
That reminds me of our son a little bit, how he, a picture popped up, in my photo reminders or whatever, and it was a few years ago, and he had this outfit on. I was just like, I can't remember who he was pretending to be, but it was multiple characters. And he was like, he had the gloves, he had like a hood.
But it wasn't just any hood, right? It was like the bear hoodie, or are we thinking of a
no,
different picture?
oh, that's a different one.
Okay.
Yes, that's a different one. I mean, we did see that one. This was a different one that popped up today. So he had like it was almost like he was a climber, and I think it was his gecko phase, like PJ Masks. It was his kids show.
Yeah.
And he was gecko for like a few months and would climb everything because he could have sticky hands and like do the
Makes
thing.
sense.
But he's constantly like multiple characters and layered upon layered and has the outfit, and that's just, you were listing off all those things. I was just like, wow, okay,
Dang.
multi-use.
That's
what that is.
Yeah, mixed use. 100%. Yeah. That very much
So funny.
is what's going on there. Yeah, so we purchased 2 properties.
Okay.
And by we, I mean, it is us, even though you were like, I had nothing to do with it.
I did not.
Yeah, so there's kind of an interesting situation arose where there was a family who they needed to raise some money to take care of the dad in the family. And they have multiple properties, but they decided to sell these ones quickly, like within 2 weeks.
Whoa.
So they could get the cash in order to pay off some debt, and then ideally generate enough from the sale of those proceeds to then fix up a few of the other properties and then sell those at at the regular market rates and amounts, and that's actually where they'll make the majority of their funds.
Okay.
This was really just to get them to that point, because they weren't going to be able to fix these up and refinance them in 2 weeks. It just wasn't feasible.
Yeah.
So I stepped in and made competitive offers and won it. And part of it was like no contingencies, close in 2 weeks.
Yeah.
And so I just want to share some of the numbers of what I saw from it. So we'll start with the one. It's only 1,600 square feet.
Okay.
It's but it's 3 like retail spaces, storefronts. Maybe that's. I keep trying to figure out. Maybe help me brainstorm this. We'll do this live. What do I call this thing? Because it's not like I kept saying like the office building, but
it's
they're
not
not
really
really
offices.
office building.
It's like a commercial space.
storefront, like commercial retail
spaces.
I was trying to be more specific than commercial.
Sure.
Oh, I do like storefronts. It's like 3 storefronts. There's not really stores.
They're not store.
though.
Yeah, they're smaller.
Because there's 3 businesses that operate out of there. I would love this in the comments. Let me know, like, what should I call this place? Because I can't. One's a salon, which is more of a storefronty type of thing.
Sure.
One is pet acupuncture, and then the other one is like
fascinating,
a
by the
pet
way.
physical therapy.
Yeah.
Or like whole health, I think is what it's called. But essentially it's physical therapy. If you didn't know it was for pets, you'd walk in and be like, oh, it's a PT office.
Yeah.
So it's PPT. And,
PPT.
Yeah. So PowerPoint? What? No. Pet physical therapy. So that's what they are. So they are kind of office. I guess like you say, doctor's office, I guess. And these are doctors for pets. So maybe it is an office building.
And a doctor for hair.
The doctor for hair. The hair doctor is in.
Sounds like something from a soap opera.
Oh, 100%. I was just thinking in my head. So anyways,
offices, storefronts. I don't know.
Yeah, they're all close in size. Like one's 400, the other one's 500, the other one's 700. Okay. Hopefully that maths. Yeah. And so that's what it is. Super simple building, and it's currently bringing in a little over $26,000 a year.
Okay.
A couple grand each month. And so I built into it a vacancy rate of 3%, which got me a gross rent. Oh, I also did a comparison analysis for what other rents other people are charging in the area. By the way, all of these people are their lease agreements have expired and they're just kind of on this month-to-month unwritten thing. So part of the process is
interesting. Yeah, getting them back on written leases.
Part of what I'm going to attempt to do is like, hey guys, let's talk about $1 more per square foot to get it in line. And at the very least, like, let's have this like on a regular ratchet thing for it. That's what I'd like to do. We got taxes, insurance. I was actually surprised by this. It's only $1,000 a year for insurance.
Really?
Yeah. Homes are cheaper.
People... Oh.
Yeah, because normally I pay $100 a month for a home when we're flipping it, and which would be $1,200. Yeah. And so this is only $1,000. Oh. So I was pleasantly surprised by that. I guess there's just less stuff to break inside or something. Management fee there, 9%. Maintenance and CapEx expense of 10%. Utilities, it's about $1,500 because paying for water. No garbage, if I remember correctly. And so it gives a net operating income of $16,800. So here's something that I did, which was super cool. So you can then you can take that net operating income. Like there's a lot of what people do is they'll say, okay, now there's a cap rate, which is like, what are people willing to pay for assets like this? And honestly, there's no comps in the area. So like, I made up a number, 7%, called it good. Yeah. It put the value of the property at about $240,000. Okay. Once it was rented at the higher rate. Before then it's like $215,000, I guess. But what I did was I took that because the plan is I bought it fast. I used some short-term financing, like some bridge debt. And then I eventually will refinance it into a longer-term debt. Like that's the plan. So what I said was, okay, given my net operating income, banks have what they call a DSCR ratio, a debt coverage service ratio. So, so they can tell you, how do I say it? They want your net operating income. It's like, it's a ratio. They want your net operating income to be at least 25% higher than whatever you make for your mortgage payments. So you have some buffer. Yeah. Makes sense. Yeah. Totally fair.
Seems smart.
But what that means is you can do the math. And so what that means is that if my net operating income is a little over $16,000, it means the maximum payment I can make on a mortgage is $13,400. And so you can kind of back into this. Well, now we can make some assumptions. Okay, it's a 70% loan to value, a 20-year amortization schedule at 6.5%. That means that the maximum loan I could get is $150,000. And if you assume that, again, that's a 70% LTV, I can do the math on that to say, well, if I divide that by 70, that means my down payment must be $64,000, which means the bank would value this property at $215,000.
All right. Yeah.
And I offer $200,000.
Backwards math.
Yeah. Huh. Kind of cool, right?
Yeah.
Yeah. I actually hadn't ever explicitly done the math.
Yeah. Done it that direction.
Yeah.
Usually it's the other direction.
Yeah. Usually it's more like it's a solve for type of thing.
Sure.
But I was like, I was just trying to figure out like, how would a bank see this? And am I in the reasonable ballpark? So I felt good about that particular one. Yeah. So that was the Main Street one.
All right.
Kind of cool. Again, my plan with this one is there's some repairs that need to happen on the south side of the building, which is where the weather hits it. And then probably repaint the entire building. There's an AC unit that also needs to be repaired, replaced, something like that.
So a few fixes, refinance it. Hold on to it.
Yeah, hold on to it. That's the plan.
Cool.
For as long as I can.
It was kind of fun to say you rent out to a pet acupuncture and pet physical therapist.
Yeah, right? Yeah. The problem potentially here is that I put $0 into this. So I invested $200,000. So that means if I do get a loan for $150,000, $50,000 has to come from somewhere. So getting the long-term financing is going to be tricky. Does that make sense?
Nope.
So when I bought the property, I essentially got 100% financing.
From who?
From two different sources. From two different lenders, essentially. Okay. one of the lenders provided 80%, the other lender provided 20% of it. So
You
I
put zero down.
borrowed, $200,000. So if all that works out perfectly and the bank does come back to me and says, yeah, we do think that 70% LTV makes sense and the value of the property is $215, so we're willing to give you $150,000. That means I have to come up with $50,000 somewhere, somehow, in order to properly refinance it.
Like a post down payment?
Kind of, yeah.
Seems kind of weird, but
That's just how it works, yeah.
why wouldn't you just keep
The current debt I have on it?
some of the current debt you have on it?
I could, but it's like 12%.
Oh, so
It's
just
expensive.
expensive.
I might potentially ask them if they're interested in converting it to like a lower debt amount, but they get paid monthly. Maybe they would take like an 8% or something like that and just be like, yeah, 100%. That's an option. The other thing I want to do is look at the other building instead.
Okay.
And see what that one looks like.
Yes.
So that one currently right now is not making much. It is doing, I think the last I checked, $450 a month on it. I should back up a step. So this other property is cool. It has a one bedroom apartment building on it with like
apartment unit?
Yes, apartment unit. But it's weird. It has like a living room and a family room, or like a really big kitchen with a dining area. It's a layout. It's like 2 stories. And so you go in and there's like a living room thing on the bottom, on the first floor, and the bathroom. And then you go up some stairs, and then there's the kitchen, which is tied to another bigger room, and then the bedroom. So it's technically 1 bedroom, but I have a hunch if you do it right, you could treat it like 2 bedrooms. Where if it was me, I would probably get like one of those like some of those Japanese wall things.
Oh yeah,
and
some
section
dividers.
off part of it and be like, yep, like
Make
this
like
is
a hallway or something.
yeah, on that first floor, and then just kind of section. I think that's what I would do personally, but whatever. And then there's the 11 storage units, which is where the majority of the money, actually 100% of the money is coming in right now. And there's 11 of them. These are 11 by 29 square feet, like units. They're big.
They're big, yeah.
Quick math, they should rent for somewhere between $200 and $300 a month.
Okay.
Just given there's but there's not a fence and there's lacking some other features, so I would go on the lower end of that. And so this 1 unit apartment should rent for like $1,500 a month.
Okay.
The storage unit should rent for $2,200 a month. And it'll probably like some of the existing folks, I'm not quite going to jump them up to $200. But like we're going to get that up. And then there is a 3,000 square foot shop with a bathroom attached to it, which the current sellers are using it, and they have 60 days to remove their stuff, or I guess start renting it. And that will rent for somewhere in the, what did I write down? Somewhere in the 70 cents to $1 per square foot, which puts it in like that $2,000 to $3,000 a month range, which again, I went with the $2,000 because I'm not an idiot. I go conservative on all that stuff.
Yeah.
So instead of the current $450 a month.
Yes, that's a significant difference.
It has the potential.
I'm like adding it up in my brain here.
It has the potential to be $5,700 a month.
Yeah.
Now, having said that, vacancy rates for storage is significantly higher. So instead of it being a 3%, I did 10% for it. So that gets the gross rent, when you take into account vacancy, about $61,000 a year.
Okay.
Which is awesome.
Yeah.
There are taxes. Insurance is also like $6,000 a month or a year. Sorry, so it's significantly more. There is a management fee. You're still going to have CapEx, which I also put at 10%, which feels a little high, but I don't care. It does need to be repainted, so there definitely are going to be some expenses up front. And then there are some utilities that I'll pay for that are shared for it. So that makes a potential net operating income of $38,000. Again, right now, it's not that. Yeah. It's negative. It's fine. And then I gave it, again, I kind of did the cap rate math, and I was like, I don't know, higher cap rate because it's kind of the storage warehouse thing. But more importantly, I went and I did the mortgage math on it. So the mortgage math is, if you do that DSCR number again, the maximum payment I could do would be $30,000. So NOI, 38. Max payments would be $30,000, which means a max loan at all the same terms and stuff would be $340,000, which is nice. Which means a bank value of $485. I bought it for $320.
Oh,
so quick math on this one, right? In theory, if I do all these things and I get it refinanced, I can then get a bank loan for $340,000, which means because I did the same thing. I paid zero down for it. I got loans on all of it. I can fully pay all those off, plus have an extra $10,000 set aside. That doesn't quite get me to helping with that other
that's
property.
what I was thinking. I was like, well,
but
have a
it
little
puts
bit
it where
towards
it's
the other
like,
one.
okay, maybe I do have a $40,000 note that's sitting on it, and I do talk to my lender and say, hey, do you want to just camp your money here for a bit and make some more for it, and just kind of lock them into a long-term rate? Very much a possibility. Or do another deal somewhere and flip a property, which is easier said than done. But do something like that, and refinance it that way. But yeah, that's.
Are there actually people who would rent a warehouse place? Like, what would you rent that for?
Yeah, 100%. It's an industrial building, is how you think about it. So, and having a bathroom.
So it's kind of like the other place that we have.
Yes,
that
Jefferson.
Businesses will rent it to do.
Yes. Yep. 100%.
Whatever, manufacturing.
Yeah, and it's got two car doors on it. Okay. It's got some man doors. Like I said, it has a little office area with a bathroom. Oh, 100%.
Okay.
Yeah, apparently, I didn't know this, but way back in the day, HP actually rented out this spot. I don't know why, but they did. And they, at the time, this was like many years ago, again, like 20, 30 years ago, they were paying $1 per square foot for it.
Oh.
So.
Okay. So it's valuable.
Yeah. The dollar per square foot, honestly, it's low. I could potentially be worth more. I gotta really go through and do the numbers and the math. I think the very fact that they have to share it with a storage unit kind of reduces some of the value.
Sure. Yeah.
Because you might have other randos walking by. They can't just take over the parking lot.
Right.
Which is why I think it's going to be worth less. But no, I feel like getting $1 per square foot's not.
Interesting.
That's what I'm going to go out the gate trying to get. Yeah, no, 100%. Apparently, there's a Les Schwab across the street, and at one point in time, they were interested in renting out that entire building to store stuff,
supplies, and
tires, and whatever tools, whatever other stuff there. Yeah. And so yeah, no, it could totally be a. Yeah, no, I think it's a cool building. Which if I do rent it for, if I do get that dollar increase, and here's the math, right? If I increase it by, instead of renting it for $2,000 a month, rent it for $3,000 a month, that is an extra $12,000 towards the NOI, which again, you do the math for it. You go, oh no, that's almost another $8,000 towards the getting cash back to pay with that other loan. So no, that's potential to be really good. So which again, I'm flirting with some perfect math here, but
yes,
I feel really good with these conservative estimates that I'll be able to refinance this storage, which I am going to call James Storage Works, because it's a bit of an homage to the name of the seller, because his name happened to also be James. And it's not just storage, there's some other stuff. And so according to ChatGPT, James Storage Works sounds cool. So I got it. And so that's where's it going with this? So that's the plan with it. And I think, like I was saying, with the conservative numbers, I think my plan is going to work out really, really well there. Yeah. I knew for those retail spaces, looking at the numbers that it was less interesting, and there was going to come a point in time where I was like, I'm going to have to figure this out.
Sure.
But they were kind of a package deal. And so I was like, yeah, whatever, I don't.
Well, and there's some interesting things you can do with that building too. And marketing and getting different clients or doing fixes or whatever.
Yeah, maybe.
I don't know.
Or I know there are some banks that will do like an 80% LTV.
Sure.
In which case, if that's the case, that would solve. And the goal would be to do them both at the same time.
Yeah.
And if I do get an 80% LTV on both of them, then definitely the warehouse would cover for that one. And off to the races, we're good to go. Yeah. So,
I mean, if you can prove that they're profitable, then the bank might give it to you. So.
Well, so that's the nice part about a lot of the commercial stuff, right? Like I'll have long-term leases locked in for that. So that part's easy.
Yep.
Same with the warehouse. The tenant one might be a little bit more difficult, but if I show that they're if I do an annual lease instead of a month to month, I can show that. And then the storage is going to be the one where like, maybe. Yeah. But again, there's 11 of them. So the vacancy risk gets significantly mitigated because there's 11 of them.
Sure.
And so it could be fine. Like, I think a bank would look at it and be like, no, we totally get it.
All right.
So, yeah, but pretty fun, pretty exciting. But anyways, that's some of the numbers behind it and some of my thinking and logic on how I underwrote this one. It was one of those pretty simple, almost back of the napkin types of things. Because I went, well, if I get these numbers right, like I don't have to necessarily do the super sophisticated spreadsheet to prove it all out. Like, no, I can keep it pretty straightforward, as you saw. Like. Pretty easy numbers. And part of it too, I knew these properties and how to manage them and what their potential was, which also helps mitigate a lot of the risks. Anyways, kind of fun. If you would ever be interested in being one of those lenders on a deal like this, because I got investors, they're making 12% on this deal, which is great. Let me know. Let's absolutely talk, because I am continuing looking at other deals. And would love to talk about what that means to be it. So with that, thanks for listening. Have a great day.